Indeed, Guy, a very good day for the shares of Deere. And it was a monster quarter. And also really very encouraging to investors is the fact that they are raising their full year income outlook in a pretty significant way. As for the quarter, sales beat by 34%, income up 169%, really pretty incredible. Now, they have talked about what many companies are talking about, supply chain pressures, but a piece of the pie, the puzzle here is the fact that the ag equipment prices up 7%, and that is also a reason that they raised the forecast. Very strong demand from the ag part of the business. Now, if we take a look at Deere on the year, it's off to its best start in more than 30 years. This is a quarterly chart, so each bar represents a quarter's worth of performance. And you can see over the last 4 quarters, Deere has done tremendously. The rising crop prices really helping out Deere, and you can see right there on the year right now, starting that first quarter up about 39%. Again, the most positive start in about 30 years. As for those rising ag prices, let's take a look at the Bloomberg commodity ag index. And there you have it, Alex. It's unbelievable. This is more your wheelhouse than mine, up 66%. Is there real demand there? Have farmers planted the right way? Or is it just too many dollars chasing too few assets, Alex?
Yep, same deal. Great deals. Abigail, thanks a lot. Really appreciate it. Let's get more on those numbers, plus what's going on the call. Bloomberg opinion columnist Brooke Sutherland joins us now. You've been looking in on the call. The headlines are super interesting. Brooke, give me some of your takeaways.
I mean, I think the real story here is pricing. I mean, Deere has just been incredible on the pricing front. They've really been able to charge what they want for their equipment. And, this is not necessarily a new phenomenon for the company, but I think one thing that's worth watching is that this technology is getting more complicated. They've really invested in precision farming, digital upgrades. And when you offer farmers the kind of services that they can now provide with that digital connectivity, you can charge more for it and people will pay for it. I mean, it's worth it to be able to, get more yield out of your crops. And so I think you're really seeing that play out. And, they've talked a lot about these supply chain issues that, of course, are affecting, almost every corner of the economy. But it does seem like Deere, more than other companies, has a grip on those problems.
In terms of how significant they are, though, what are we learning on the core? They're having problems with warehousing. They're having problems with chips. It does seem to be quite
pervasive,
quite in depth in terms of the problems that they're seeing at the moment. It seems to go into every aspect of their business. How much in danger are they, though, of getting caught out by just a shortage in one key area that means that actually the whole machine grinds to a halt?
I mean, I think that's something to watch, but at this point, I think you have to take confidence in how they've managed these shortages so far. I mean, this is not a new issue, and we've certainly heard a lot about all of these issues, from freight to labor to semiconductors, from a bunch of different companies, and you're not really seeing the pain at Deere that you've seen at some other companies already, and certainly compared to the automakers, they're faring much better. But I think the comment on semiconductors is one that's worth noting, because we also heard from Caterpillar about this and warning that they may see problems and difficulty meeting the very robust demand for their machinery because of the shortage of semiconductors. And just to go back to what I was talking about with Deere, all of this equipment is becoming so much smarter, so much more connected. And that does leave these companies much more dependent on semiconductors than they've ever been before.
Such a good point. And also to Guy's point, warehouses, ports, truck labor, one of the biggest constraints on supply issues. Have we learned anything about them having to raise wages as well, like on the other side of the ledger here?
I don't know about that specifically for Deere, but I know, sort of across the industrial sector, I've heard that from more and more manufacturers that they're having to offer more money to get the people that they want. But if they do offer higher salaries, they're not having as hard of a time finding people. Talking to people at Rockwell Automation, they have offered more money, but they're getting the people that they need. Or Train Technologies, which, has really made an effort to invest in living wages. They're also getting the people that they need. And so I think that does raise some questions of, are we actually seeing a labor shortage, or is it, somewhat of an issue of these companies not being willing to offer what they need to attract the talent, especially in a hyper-competitive environment like we're going to see as the economy snaps back from the pandemic?